Overall, many countries are studying the potential benefits and risks of CBDC and are exploring the possibilities of issuing their own digital currencies. While there is no clear consensus on the best approach to CBDC, it is likely that we will see more countries exploring this technology in the coming years. Before continuing, don't forget to subscribe if you think this type of content is good to reach as many people as possible for educational purposes. Central bank digital currency is an emerging trend in the global financial landscape, and countries around the world are exploring the possibilities of issuing their own digital currencies. Here we'll see some updates on the plans of some major countries regarding CBDC. China is leading the race in the development of a CBDC, with the Digital Currency Electronic Payment (DCEP) project already in testing phases. The DCEP will be issued and controlled by the People's Bank of China and will be used to replace cash in circulation. In America, the Federal Reserve is studying the potential benefits and drawbacks of issuing a digital dollar. However, there is no concrete plan for a CBDC yet. In Europe, the European Central Bank, ECB, is exploring the possibility of a digital euro and is expected to make a decision on whether to proceed with a CBDC project in mid-year. In Japan, the Bank of Japan is currently conducting experiments on the technical feasibility of a CBDC, and the government has set up a committee to study the implications of issuing a digital yen. In United Kingdom, the Bank of England has set up a task force to explore the possibility of a CBDC, with a report expected to be released later in 2023. In Canada, the Bank of Canada has been exploring the possibility of a CBDC since 2018 and is conducting experiments to test the feasibility of a digital currency. In India, the Reserve Bank of India is exploring the potential benefits and risks of a CBDC and is expected to announce a decision on a digital rupee project in the near future. Central bank digital currencies are digital versions of a country's currency that are issued and backed by the central bank. Unlike cryptocurrencies like Bitcoin, CBDC are designed to be legal tender and operate within the existing monetary system. They are digital representations of fiat money that can be used for transactions, just like physical cash or bank deposits. CBDC are different from traditional electronic payment systems, which rely on commercial banks to facilitate transactions. With a CBDC, the central bank would have direct control over the digital currency, allowing it to track and monitor transactions and potentially even control the supply of money in the economy. There are two main types of CBDC: retail CBDC and wholesale CBDC. Retail CBDC are intended for use by the general public and can be used for everyday transactions like paying for goods and services. Wholesale CBDC, on the other hand, are designed for use by financial institutions and would be used for large value or interbank transactions. The potential benefits of CBDC include increased financial inclusion, improved efficiency and security of payments, and greater monetary policy effectiveness. However, there are also concerns about the potential impact of CBDC on financial stability, privacy, and the role of commercial banks in the financial system. While central bank digital currencies have the potential to offer several benefits, there are also some potential disadvantages that could impact users. Here are some of the possible disadvantages of using CBDC. Loss of privacy. A major concern with CBDC is the loss of privacy, as every transaction would be recorded and tracked by the central bank. This could make it difficult for users to maintain their anonymity, potentially exposing them to surveillance and tracking. Cybersecurity risks. CBDC would be entirely digital, making them vulnerable to cyber attacks and hacks. If the digital currency system were to be compromised, users could lose their funds, and the stability of the entire financial system could be at risk. Limited access. Not everyone has access to the technology needed to use CBDC, such as smartphones or internet connectivity. This could limit the number of people who could use the digital currency, potentially creating a divide between those who can and cannot participate in the financial system. Dependence on central bank. Users of CBDC would be entirely dependent on the central bank for their money, without the option of storing their funds with commercial banks or other financial institutions. This could make users more vulnerable to changes in monetary policy and central bank decisions. Disruption to financial ecosystem. The introduction of CBDC could disrupt the existing financial ecosystem, potentially putting traditional banks and other financial intermediaries out of business. This could result in job losses and a loss of financial stability. Overall, while CBDC have the potential to offer many benefits, there are also potential disadvantages that must be carefully considered and addressed before their widespread adoption. Thank you, and do not forget to subscribe.